Good morning, everyone, and welcome to the European crossover webinar. And we've seen the yen come back or come off quite a bit here. I think that's one of the main stories here. We had seen us come down into this, our bias chart support. Was here at 907. Thought we had 905. It was 907. I think we got as low as 903, I think. And I was a bit surprised, and maybe that was a good little indicator. Yeah, looks like we got 903, 902 and a half, something like that. But we had already come off quite a bit. And Andre actually, I don't know if you saw that in the Asian session, he posted a harmonic pattern. I'm not much in harmonics myself, but it actually, the stretch was coming down here. And if you think about this, when we go into the dollar yen, we had been talking about the pivot. Here's 927. Remember, we've had that in there for a long time, and it was trouble on the way up. And you see how the market kind of went back and forth on both sides. And then once we got past it, we really started clipping along. So I guess it makes sense that this would work as a magnet. I thought, one of the things that, surprised me a bit is because I thought we'd break 109, especially as the S&Ps went lower. We'd probably get down to about 881, 82 or something like that. And then we'd see a pretty good little bounce back, but not this kind of bounce back. But one of the key things, I guess you can look at it, and I was thinking last night in retrospect, is when we got down there, because we've already had a pretty successive fall here in the, dollar yen, or if you want to look in the yen pairs, yen strengthening. And it's just been, relentless, okay? And you can see how wide the disparity is between the two exponential moving averages. So the market was pretty oversold. But one of the things I thought was interesting, and I thought, like I said, in last evening in retrospect, as the market was moving higher, I was thinking, wow, I thought I was going to go and break 109. And when the S&Ps didn't, and I did mention that in the chat room, I'm like, surprised it didn't, break. And boy, have we come back with a vengeance. Actually, we've made it all the way back up here to 977. Look on here. Looks like we made it right back up here. Yeah, right up there. See? They've come off a bit here, a little bit from that level, but all the way back up to 977. Have to see what 23% back would be, but that 977 is a key level up there. Yeah, that was, oh wow, we just made it just almost up to the 23%, which is 982. And then we have the 977 right here, made it right there, just to the clip, 977. To me, that was, one of the big ones. Another one also surprising me is this dollar CAD. I went on about how I thought this would have to go lower because it has not been able to go above 135. Well, it's still not above that, but it's still holding up like a rock, and it's been a surprise to me too there. We've also seen the cable slip below the pivot here. There's that pivot 2980. I posted in the room yesterday. So I was asking, and I posted in here 2944 was our bias chart, and then bias chart support. But I was then looking for, and I think the market ended up stopping right around that area. But I was looking for a dip, possibly as low as 2916, or what I call a stretch. So the low this morning's been, oh wow. Okay, we're still in the 20s, but I had a stretch down here to 29. I think it's 2916. I think I remember. We also have maybe it was 2919 because I got this dip here right there. Yeah, there it is, 2916. So I had a stretch. I put 2944. So I was asking, I said, well, we've got 2944 as bias chart support. The low was, well, 2941. Not bad, not bad. Yeah, 2941. Had 2944 and then with a stretch at 2916. This has continued to remain weaker. Also, another one here before we get into the news is the euro odd. I posted this here yesterday also a couple times in the chat room. We're very close here. To reaching our target, our initial target. Most stuff's always more short-term oriented, but when you look in here, you see euro odd has been a solid buy mode with the mob pause at 61.14 with sights set for 62 even. Confluence was 62.23 to 61%. So we're just about there. So in between here, I think we get a good little pause. Obviously, Aussie's still in trouble. With that, we'll go on and move into the news. On Mondays, we kind of get the overview of the week, and as I said, we were touching on all the postings for the on the basic technical that we do with the week looking out, and then we kind of fine tune things on Tuesday and Wednesday from where we're at, and then Thursday kind of look like as if we're making a move as we move on. So let's just go on and move into the news quickly. The morning bid, Brexit talks a road to nowhere. UK's May told. Pressure's going on. I wish she would just leave. Pressure's going on. PM Theresa May to ditch her attempts to forge a cross-party Brexit deal with opposition Labour. 13 of the former cabinet colleagues have written an open letter urging her to not agree to Labour's demands for post-Brexit customs union with the EU. They also argue that a deal would, in any case, not be binding to her successor, effectively acknowledging the same concern raised by Labour negotiators. Despite the dim outlook for the talks, May is sending her Brexit negotiator, Ollie Roberts, to Brussels to discuss what tweaks could be made to the existing text of the UK's future relationship with the EU if consensus with Labour is found. As expected, okay, the Viktor Orban at the White House. One moment. After the worst day of the year for the world stocks on Monday, investors are clutching at straws for something positive from the latest escalation of the Sino-US trade war. The all-country equity index fell a further 0.2 on Tuesday after dropping 2% on Monday, its worst single since December 4th. China on Monday said it would raise tariffs on some $60 billion of U.S. imports in retaliation of a near doubling of U.S. tariffs on the $200 billion Chinese goods announced Friday. Wall Street stocks fell more than 2% of the worst day since the first week of January. The tech-heavy NASDAQ had the worst day of the year so far, and the VIX closed above 20% for the first time since January 22nd. U.S. and European futures were up 0.5% overnight as President Trump said he would hold off raising tariffs for now on the remaining $300 billion worth of Chinese imports and held out hopes for some meeting of minds when he sees President Xi Jinping at the end of June. What a weak, God, that's a weak move. And let's see here, Japan's Nikkei lost 7/10. In the currency markets, the offshore yuan steadied after Monday's lurch to its weakest level of the year, enabling the emerging index to stabilize as well. Safe havens such as Japanese yen and treasury bonds eased back from the best levels overnight, with the dollar yen backing from 109 to 109.50 for the first thing in London. Swiss franc retained much of its gains, however, with the 10-year bund yield rising only slightly after falling to the lowest since March yesterday. Some of the reasons for the stabilization on Tuesday has been inevitable ratcheting up of the Fed rate speculation after Wall Street's swoon. Fed futures now indicate as much of a 75% chance of a rate cut by December, as a Treasury yield curve between 3 and 10 months debt flirts with an inversion. And that'll be it. Let's see. Move into currencies. Aussie dollar and Chinese yuan rise after Trump's bullishness on trade. Chinese offshore yuan and Australian dollar found their footing again on Tuesday as broader sentiment stabilized after President Trump said he expected Sino-U.S. trade negotiations to be successful. Trump said earlier he would meet with Chinese Xi Jinping at the G20 summit next month. China announced on Monday would impose higher tariffs on $60 billion worth of U.S. goods, following Washington's decision to hike its own levels on $200 billion in Chinese imports. Though analysts said it would take further time for volatility to settle completely, risk-sensitive currencies, including the offshore yuan and the Aussie, held up well following comments from Trump late on Monday that trade talks with China are going to be very successful. After he talks a lot of smack, look at him just backing off. Masafumi Yamamoto, chief currency strategist Mizuho, said the timing of Beijing's announcement said it would impose higher tariffs on U.S. goods. It seems the timing is probably a surprise, so the moves in the currency markets are rather large, Yamamoto said, and that market participants could also be overreacting to Trump's latest trade-related comments. Trump said he believes that the talks will be successful, but success for him isn't necessarily a success for China, Yamamoto said. Australian dollar managed to form a 10th of a percent to 69.52. Thus, is often seen as a proxy for Chinese growth. Volatility in the market has risen quite a lot, and it will take some time before it settles, said Yukui Ishizuki. Ishizuki said he thought that sentiment would deteriorate significantly from ahead of Trump's planned meeting with Xi next month. Quite a lot of negative news around is coming out, but with things as they are, those have already been priced into the market. And lastly, I just want to touch on Bitcoin. $8,000, its highest since July of 2018. Bitcoin urged to more than $8,000 late on Monday, its highest since July last year, as the cryptocurrency rally gained further momentum. There's no real fundamental explanation as to why Bitcoin, the original cryptocurrency, hit a 10-month high on Monday, but there's an ongoing blockchain and cryptocurrency conference in New York called Consensus, with big investors and influential market players gathered to the network and discuss the current state of the industry. Bitcoin has also rallied during the previous Consensus conferences. Bitcoin was up nearly 17% at 81.31 on the Bitstamp exchange, the largest daily percentage jump since April. Some analysts point out that Bitcoin's rally coincided with the escalating trade war between the U.S. and China, which added into the overall market risk, overall risk sentiment, but it's too soon to declare Bitcoin as a safe haven asset, they said. And let's see. So let's just go on and move on to the analysis. So yesterday we had our resistance at 1262, and the rally took us right to 1263. We need to get that foothold above 1262 in order for this market to push higher. If we can get that foothold above 1262, that'll push the market and get us going. So until it's been broken, that's the resistance here, 1262. We're trying to push up a little bit higher. Maybe they'll make a stab here, but it's all about 1262, and that's a daily close. So until that's taken out, that's still going to be resistance. As far as support, It's pretty clear where that's going to be. That would almost work like a little bit of a trigger, and that's going to be 12.20. For right now, it might be a little bit close if they want to test if the dollar gets a little bit more movement. It's going to be right there at 12.14. So we've gone below the pivot again. This has just been an interesting move. We broke below the pivot, looked like we were going to accelerate down, or not accelerate down, but certainly make a push lower. We turn around and rally back up, and it looks like we're going to the moon. Then we turn around and slide, and we did the further slide. Once again, I've got that support until it fails. Could we press below it? Possibly so, but until it does, and I'm talking about which was the stretch, and here's down here. It's going to be 29.16. Resistance at this point is going to simply be the pivot, which is 29.80. We'll see if we can push just a hair back in case we touch some stops. In front of that, that'll be 29.90. 29.90. And we're back to bearish on this thing. Hard to point out there's been a range as we slide back below the pivot. Well, we've slid below the 61% here, and the door's open for them to continue to push lower. And initially, I mentioned about the 69.40, but I thought if they got a foothold below that, they'd really start to slide. Well, they haven't, but this thing may continue to just drift lower. I thought we'd make a quick dash lower here, but we haven't yet. But that's here at 69 cents, and I'm going to keep that for now for 69. Resistance is right there, 69.97. And looking here with the Kiwi, same thing here. It's held up fairly well. One of the things, I mean, that I mentioned yesterday, there's two little rants I had, mini rants. One was with the Canadian dollar a little bit, mini, because I thought we'd still push low, which I haven't. But the other thing I talked about was the Aussie dollar, and to a certain extent the Kiwi. Remember, the world was going to come unglued if the China talks don't, if they get a deal because they're on the outside. Well, there's no deal, then the way I'm thinking is maybe it's not so bad for these guys after all. And certainly you're seeing that with the Aussie. I mean, we're lower, but I mean, I'm sure some people are probably looking for us to slide 2 and 3 cents over time, and I just don't see it. You see what I'm saying? And price behold, you know what I mean? It's just simply not there. You know what I mean? We haven't even taken out 69.40, much less 69 and 68. You see what I'm saying? So that's what I'm saying is that's why I didn't think we'd come apart. I thought if we did slide, I thought we'd go to 69 cents. I didn't expect to see any follow through because how's it bad for Australia then? I'm not saying it's good, but it certainly isn't bad. You mean they're going to be shut out? Of course, we're talking with the Kiwi now, but look, even the Kiwi, I myself would have thought, we would have broken down here and then I remember I was saying the key is going to be, the daily defense of 64.96. Hey, we can't even take out 65.45. We can't even take out the prior week's lows so far. So support right now just be the 65.17 for now. If it eclipses past these lows, this is still important to 64.96, but shoot, you'd have to come a pretty good chunk. You have to come off 60 pips on this for us to trigger this area. So we'll say we'll go with the 65.17. We're trading pretty tight in here. We'll go right there, 66.16. And let's move on to the dollar CAD. Now, this one, I have to say, has surprised me because we had that strong Canadian data jobs report, and we're still holding up, but we have not been able to take out 35.05. But I would have expected, which my thinking was, we'll start to slide. And we did come down to 30.32, and props to them, they came right back. But the whole thinking is same thing. It's a commodity currency. It's going to be impacted by trade. Well, I kind of think, like I said, I'm still, until for right now, I mean, our bias chart resistance wasn't here at 35.04, but it's all about 35.04. We need to get a foothold above 35.04. I would have expected a slide back. I mean, the thing about the dollar CAD is we get trapped in these little ranges in here, and then it just doesn't go anywhere until all of a sudden something breaks, which we did get the employment report. It didn't break that much, to be quite honest. It came right back, and here we are pushing right back. Now we're not going anywhere. We're kind of stuck in here at this 34.74, and I think that's our bias chart resistance. It is, but I'm gonna move this up to 35.02 because that's the real 35.04 because that's the real resistance here, the key thing right there. I'm surprised to see it retaining this up in here, but we'll see what happens. Support's going to be right there. 34.29. And on to the peso. We did hold this area here on the daily. We covered that in the Asia analysis to start out the week. And we're certainly open to move higher, but you know, after the move that we saw yesterday in equities, I'm surprised that we haven't been able to push out of this area here. Look at this. I mean, we rallied up, then we turned around and gave back up, then we rallied up a little bit, but we're still stuck in here, not really making any headway past this 1923. And we need a daily close above that to open us to move higher, but somewhat surprising, you know, that we weren't able to. I would have thought we'd have been pushing up here, we'd probably be up in here. So I'm a bit surprised here. So until things change, that's the resistance, 1923.6. As far as support, well, we had 1914, and that held the market in check here. So against 1914.075, and right there, and that'll just stay as resist support. Let's move into the dollar yen. Now we did come down here to the pivot, and we got past the pivot, and it certainly looked like it was heading for a pretty good sizable break. Matter of fact, I've thought that they would go and take out the 109 stops, and I thought we might get as low as 0881, and as the S&Ps were breaking down, but we ended up holding. And I myself was, you know, at the time I was a bit perplexed because I thought at least we would trigger some stops just below 109. And as I was saying earlier at the beginning of the show, if you're with us, is that in the Asian session, I was looking back in retrospect and I said, well, maybe that was the market telling us something, because even though the S&Ps were pushing lower, we couldn't take out the stops at 109. The low was like, what, 109.02 and a half. And so here, since then, we've pushed up and we've actually made it all the way back up here to 77, this level here. So for now, we're going to go with this. 977 is a resistance. You can make cases it can push a little bit higher, but hey, that's a level, and it held it and kept it in check. So it's going to be 977 for resistance. Support for right now is going to be 933. Yeah, let's go move into the cash doll index. We're looking for this to move lower and potentially down here to 96.81. We've actually held up very well here. We did make a move down here towards that 97.08 area here. We got as low as what 97.03, but it's actually holding up fairly well. A little mini hammer here on the daily. Um, Well, from the get-go at the beginning of the week, we had 97.61, but that would have been a pretty far fetch. I think this is actually some pretty decent resistance right there at 40, which is where they've kind of run a little bit out of gas. Um, we'll go with this 97.45 right there for the resistance. Good level right there. But that 40 is right there. You see where that body closes 40, and that's where they ran out of gas. But we'll give it the 45 in case they make one more little push. But it'll be tough to get, grab a foothold above 45. I would think so. Support on the short haul, and there's our little pink line right there. It's 97.08. Yesterday and today are going to be, days where we really push things around so you can see things quickly flip around and maybe we do make that run to 96.81. But in the meantime, on a very short-term basis, 97.08 will go onto the QEN. This Euro Aussie is still pushing up higher here. Let's go into the QEN. So we had a move potentially down here, the 71.45 right here. The market stopped was at 71.64. So we're going to keep the 71.45. Like I said, yesterday and today, I think you have to be just, conscious of these moves in the sense that you could, think, okay, the market's going to stop here. And then I'll give you an example like the dollar. Okay, well, we're holding up pretty well. And then by later on today, maybe we're taking out 96.81. So I think between Monday and Tuesday, you're going to see these moves that could, may end up surprising you. The lack of the Aussie dollar falling through was a bit of a surprise, I think, to a lot of people. I myself, even though I didn't think it would fall like, other people think it's going to fall, I was even surprised that we didn't come down here and go to challenge 69 cents. So same thing here. We're going to keep this 71.45, and resistance is going to be right there as we had it, 72.60. In case we get a blip up in here, we can probably lower it though. Let's see here. Well, we'll keep that 72.60. It wouldn't be able to move. It wouldn't move down that much further. It'd be moving down to 52, but we'll go with that. Let's keep this 72.61. Next up, the euro yen. a little bit of a bounce back in here. Here was our support in here. This would move up just a little bit higher to right there. 22.79. As I mentioned today, we give a lay of the land on Mondays for the week going out. We go with the Asian analysis, and then today is really more so in the sense is today obviously is going to be kind of like um, seeing where we stand, because I think today is going to be just as equally important to see, do we see more follow through on the SPOOs. So you have to trade them both, I think, with you know separately but together, in the sense that you can see extremes on Monday and extremes on Tuesday. So just so we don't get caught with our pants down, we'll keep this resistance at 23.81. The thing is, if let's say that for some reason we get, I don't believe so, but let's say we get this let's say we get a strong bounce back in equities and we see the yen pairs come off. In case, I don't think it would stretch up, really the resistance would be closer to 23.57, but we would be able to goose the stops, and this is where they would run into some trouble. So we'll go and keep that the same here. And moving into the euro odd. Well, we talked about this also at the beginning of the show. And there's our bias technical analysis, or analysis to start the week, and it's with the solid buy mode with a positive 61.14 with sights set for 62. Well, lo and behold, we're just about there, and confluence with 62.23 to 61%, 56.84 to 65.55. So we may be able to go and see this today for the break on the Aussie. The stretch up here would be 62.62. If the Aussie really starts to come under some pressure, we shall see. I wouldn't be surprised if the Aussie does, and then we kind of bounce back a little bit. So once again, we're going to go with 62.23, but keep this up in here, the 62.62. Keep that in mind. But 62.23 is the 61%. We'll see if there's something in between. You see right there, that little ledge there? That's 62.31. So let's go with 62.31 for resistance. Let's take a look here on the 2-hour chart. Right there. $62.33. $62.33. Now that was hard to see for you. It was even tough for me, but if you look here, right there, there's 62.37, and I've got 62.33. Here's 62.36, but we'll go 62. A lot of touches right there. Let's call it 62.35. We'll adjust that a bit. Support. They're keeping it pretty tight up in here. We'll move them up pretty tight ourselves. If you're playing this thing, you'd know where they need to hold. $61.41. Going to the Euro Kiwi. Resistance is going to be the 71.50. And if we do get that break for the break here, they may want to push these a little bit further. I think we can move this up a little bit higher. Why to there? 70.28. You can see the Aussie yen starting to slide back as we're pushing back lows on these on the Aussie. Support right now is going to be right there. We'll go with this that low we had before, 75.66, and resistance. Tighten it up quite a bit. 76.41. We'll call it 76.42. Not sure why that had been marked bullish. Look at that Aussie, Euro Aussie still pushing up higher. Just jumped nearly 4 pips right there. Sterling yen. right there. 41.46. And resistance will come in right there at 42.51. And let's see. Sterling odd. Resistance will be right here. Remember this 87.12 we talked about. That's huge on a daily. And support, no changes here. 85.70. Although we could almost push this even a little bit higher, but we'll see. Actually, it would go up to right there if you want to know your risk level. 85.87. Okay, and there's the bias chart for today. Keep your eyes on this Euro Aussie. And I'll get that posted in the room. And thanks for joining us here on the European Crossover webinar.